Hello, what's up, traders? How you doing? How you doing? How you doing? Welcome to my YouTube channel. In today's video lesson, we are looking at simple ways to calculate pips. Okay, simple way to understand pip calculation. So, simple way to understand pip calculation will give you an insight for proper risk management based on what I'm about to share. Okay, so before we jump right into it, here is a little thing about myself. My name is Mr. Emmanuel. I'm from Nigeria. I've been trading forex for the past 6 years. Okay, I started back then in 2018. And here is Adaise Duncan. She used to work with iMarket Live. Okay, that is IML. She used to work with IML. Then I knew her back then in the IML TV. Okay, so she used to be my mentor. And what I'm about to share with you right now is what I have also learned. She's one of the mentor or the professional forex trader that I have learned this. I have learned how to calculate pips without using online calculator. Okay, and this is a simple way for me that helps me to understand what exactly that is happening uh, in the market. Okay, so and this one too, I also want to use this medium to also let you know that anytime you see another different professional trader with a name and a picture being tagged here, this is to also let you know that either the particular topic I'm about to share is the person is part of, or the professional trader is part of the person that I have learned something from based on the topic I'm sharing. Okay, so that is the essence of using all this picture, okay, and their names. So this is also to also let you know that you can go out there yourself and make more research about them. Okay, so you can know more about them, and what you may also likely to hear from their own side of the story may encourage you, motivate you, okay, inspire you to be consistent, because this market is not always easy, and no one will ever come to you and tell you how he or she has been professional traders from day one. Everybody go through one story or the other, or one difficult period or the other before they get to where they are today. Okay, so that is the essence of going out there and check and make more inquiry about them. Okay, so now this other second picture is to also let you know, this my thumbnail is to also let you know that this is my profile picture here. This my thumbnail is to also let you know that you can, whatever I am sharing based on this weekly forex forecast, okay, is as a result of all the knowledge that I have digested from all the professional traders. Okay, so whatever you are seeing me sharing within this weekly analysis is just my own strategy. Okay, having combined all the knowledge together, and here I own trade my own strategy, also share with you. So anything you can see me doing during this very particular weekly forex forecast, then that is my own strategy that I have formed based on the knowledge that I've gathered in the market, okay, or from the professional traders. So always check out on this weekly forex forecast. It's normally take place on most of the time Saturdays and Sunday, because it's always three pairs that are normally analyzed ahead of the new week we are entering. Okay, so right now let's jump into what we have for. So what is a pip? The unit of measurement to express the change in value. So everything we are about to do here is all about change in value. For example, this number is always 5, depending on the pair you are trading. If you are trading a currency pair such as a GDP USD or Euro USD, so you should be expect this number to be 5. Okay, and look at what it says, that the pip is nothing more than the fourth decimal number after the comma. So the fourth decimal number, which is this one, after the comma, 1, 2, 3, 4. Okay, so the fifth one is the pipette. Okay, so now this is what I'm trying to explain now. This is a pipette and this is a pip. So how do we come about pipette? Okay, let me explain. You know, for example, if I walk up to you now and ask you, please, sir, what is your time? I'm sure you are not going to tell me 8 seconds, 1 minute after 4. That is example that I'm using for now as a time now. So now these 8 seconds here represent millisecond or second itself. Okay, so this is what generates the minute when it comes to time, and this is also what generates the pips when it comes to what the forex. Okay, so now this is not supposed to be considered. Reason is because it's the one that determine the pip. So this number 8 here was once started from 0, counting counting 0, 1, 2, 3, 4, 5, 6, 7, 8. So once it gets to 9 and enter 10, so it's not going to display 10 here, but rather it will transfer 1 to this very particular one. Then this one will become 2. So as this one is reaching 10 and transfer additional 1 here, this one too is counting. And at the same time as it's counting reach 10 on its own, it will transfer. But when it comes to time now, time will count 60 seconds to make 1 minute, okay? Then 60 minutes to make 1 hour. Do you understand? That is how this thing just generates. So what happens here is also the same thing that happens when it comes to your time frame. Okay, so it is your time. I said something earlier before now. I said that the value, okay, change in value here represent time, represent your pips, represent your spread, represent your stop loss, take profits. Okay, it represent all those time. It represent almost everything that we are going to see in the future. Okay, so let's go back to what I'm explaining here. I'm sure you must have understand to this point. So if you understand to what I've explained to this point, you would see that you don't need to put this into consideration. So this is where the counting starts from. So 1 pip here, 2 pip, 3, just like that. Okay, so now to make it more clear. Okay, now look at this. If you look at this, this 3 represents 0.1 pips. So it's not up to 1 pips. So until he get to 0.2, 0.3, 0.4, 0.5, 0.6, 0.7, 0.8, 0.9. So once it get to 10, it will turn to what? 1.0. So that 1.0 is what will come to this point now. Okay. So this is also what brings about our lot size, which I am also going to treat in the future video. Okay, how to calculate the lot size. Okay, so now you can understand what I mean now by showing you that 0.1 has to grow to 0.9. Once it get to 10, it will then transfer 1 here. Okay, so when this one get to 10, it will transfer 1 here. Okay, so if you look at the arrangement of the whole thing, you see that 0.1 here, and this is 1 pips here, then this is 10 pips, which is these two represent 10 pips. The 3 of them here represent 100 pips. The 4 of them represent 1,000 pips. Then the 5 of them represent 10,000 pips. That is how these things normally been counted. So here is the example of what I have also tried to explain. Okay, so as a good mathematician, so if you look at this, I want to show you something. Sorry, look at this. We say that we have to ignore these 3. Okay, then the same 3 here. Please, sorry about that, just permit me. Then if we ignore all this 1.2 here, 1.2 here, as a good mathematician, what happened? So we are now considering what? 68 and what? 69. So 68 minus 69, what do we have? 1 pips, just 1 pips. So if we minus 46 here, okay, to 47, okay, 46.8 to 47.8, 10 pips. The same thing here, 46.8 to 56.8. You can see that is 100 pips. Okay, so I don't know if I have really explained it in such a way that you understand. I think this is something that you can understand it very easily. You can also just go ahead by using your calculator Okay, to subtract this from this, subtract all of them, so it can be seen that this is what you have out of them. Okay, so and at the same time, I also want to let you know that we are talking about change in value. So do not also forget that this very particular figure here, yes, the figure you are seeing here also represent change in the currency rate. Yes, change in the currency rate. For example, if you want to understand or agree with me what I'm just saying, just go to your Google. Let's do it together. Let's assume that this is a GDP USD. Okay, we are just assuming that this is GDP USD 1.2. Okay, so now if I go to my Google now, I'll set, so 1 GDP to USD. That's what I want to type now. 1 GBP to USD. So what do you see? 1.26. So what does that mean? That £1, okay, is equals to $1.26. That is one USD dollar 26 cents. Okay. So now, having given us this value, what do? We go to our chart and check where the price currently is right now. Okay, you can see this is a GDP USD. What do we have? 1.26. Can you see that now? So this thing goes with the value of the currency pairs. This is what determines the calculation of the pips. Okay. Then as the market rally up, rally down, that is the movement of what pips happening. I told you change in value from 0 to 9, 10. So once this market continue shifting, spiking, do whatever he does, then everything is working with what? Pips and the spread. Okay, pips and the spread is the movement of these very particular candlesticks. Okay, and together with the time frame that you are working with, whether you are working with 1 minute or 5 minutes. I told you change in value represent a whole lot of things. So until you understand all these things to details, then you won't be able to really understand how you can calculate your pips and then know where your stop loss should be, how many stop loss you are to put, and how much does the stop loss you are putting represent in value. Maybe with time, I still have to break it down to this. Okay, that 1 pip represents how many dollar or how many cent, so that whenever you put on your 10 pips, you know that you are risking what? $10, or you are risking what? $5, depending. Once we get to there, I'm sure I will let you know, maybe in the future video or thereabout. Okay, so let's look at what we have next. So I'm sure you must have gotten this. So for example, how to calculate if you entered NZD USD at 4.56567 and exit at 4.56772. How many pips? So simple thing you do, you just use your calculator, subtract this from this. This is what it will give you. So what brings about the answer is because if you look at the figure themselves, you see that these two here, okay, is the same thing with these two. Okay, these three here is the same thing with these three. So we are now left with 772 and 567. Okay, so this answer now is as a result, this 030 here is as a result of these three, that they are the same thing. So 205, if you remove these very pipettes, if you remember that, so automatically what we have is 20 pips. Okay, so if you minus this from this, so it will give you 205. Okay, so remember this is what our pipette, then what we have left is with 20 pips. Okay, so now this is what he said, that use this value here, 0.0025 divided by 0.0001. Okay, how come about this? You remember in the previous slide I told you that I told you that these two represent 10, the three of them represent 100, the four of them represent 1000. Because the number is fourth digit number, that is why you have to share it with 0.0001. Okay, so that is what it means. So if you divide 0.00205 to 0.0001, so this is what you have. But the major thing here is to just have it in mind that your answer is what? 20 pips you are working with. Okay. So now, how do we really imply this when it comes to trading and life scenario? So what do? If you come to your chart, what that simply means is that you take a trade in a position like this. Is this okay? Just for example, I'm explaining something. You take a trade from a position like here, then you exit the trade from this very position. Okay, so how many pips have you made in profit if actually the market goes in your favor? So what you have to do now, which I may not have the time to do with you, just do it yourself. Subtract this 1.26297, subtract it with a 1.26114. So anything that remains from this subtraction with this green 2 line here, then that is what your profit. Then the same thing is what you have to consider when it comes to your stop loss. So, as a traders, and the easy way we have been taught is that just use the crosshair, okay, to measure. So from here, this first green here to this point. So you prefer your stop loss. How many pips is that? A kind of 3 pips, okay? So you can bring it down to 10 pips. Just put it here as your stop loss, 10 pips. So you are using 10 pips to target what? To target 15 pips. So what does simply also mean is that if this trade goes against you when it's 10 pips, how much are you going to lose? So I'm likely to take this topic to the next video or future video, where I will tell you how many dollar, the equivalent of dollar to pips. I think it's very, very important. So that if you measure 10 pips, you should know that 10 pips represent how many dollar. If you measure 50 pips, you should know as a stop loss, you should know that this is what it represents. Even if it goes in your favor, you should know this is what you are going to make. It's very, very important, and I'll likely share this with you in the future video. All right. I think that is clear. So what I have explained earlier in the charts now is the same thing that we have here. Look at what you said. You enter here and you exit here. So what is the number here? 1.09207, and you exit at 1.08962. Is it what we have here? Yes, of course. You can see that yourself. Okay, 62. So what do we have? This is the answer we have here. Okay, I don't know. Just use your calculator to check it yourself to save time. Okay, then the same thing, 20.5 pips. So when it comes to yen and gold pair, then you are going to apply the same method, but then look at what is said here. 2 decimal figure after the comma. Okay, so 2 decimal figure after the comma is the pip. So you have to consider that as a pip. So what does that mean? Now, on a very good day, if you go to USJPY or GDPJPY, you discover that after the comma, which is this point here now, after the point, you have another thread. If you even go to gold, you also see after the comma here or the point here, you have 3 number here, which we all are familiar with. So now what the explanation is saying is that the third number that follows this 25 is known as what? Pipettes. So we are going to see that shortly on the live chart. Okay, so the number that follows the 5 here is a pipette. So you can now consider from what? 25. okay, as a pip. I don't know if you understand. So what's the way it applies to this JPY, whether it's Euro JPY, Australia JPY, or GDP JPY. So you have to just understand that after any figure that is at the front, after the dot, remember our currency exchange rate, how we did it in the GDP USD. Okay, so if you go and type it now, you still get something that is related to this, depending on where the market currently is right now. Okay, so now whether you are on the gold or you are on the JPY pair, so just always ignore the third number, then consider the other two that follows the point. It's as simple as that. So let's look at the next slide. Let's assume that this is a Australia JPY, because Australia JPY is likely to be this number, which I'm still going to show you on the chart. Okay, so now if you enter a trade at 95.343 and exit at 95.445, so the pips that you have is 102. So what that means is that the 2 on its own is a pipette. So you have to ignore the 2. So we have 10 pips. Okay. So the 95 here and the 95 here is what gives you this 0. Okay. So we are now looking at the 445 and the 343. Okay. So a good mathematician will understand that 5 minus 3 will give you the 2, that is a pipette here. Then 34 minus 44 is 10. It's as simple as that. There is nothing much to explain. So always have it in mind that this has to be a 2-digit number. So when you are dividing it with 0.01, because it's a 2-digit number, okay, after the points. So it's as simple as that. Let's look at what the next slides have in store. Okay, I think this is the last slide. So now, the same thing apply just as I showed you on the chart then. You take a trade at 11111 or 111.443. Okay, and then a sit at 111.909. That is what we have here. Okay, so you can see how this trade is doing because this is pipettes. So you are considering 44 and 90. So what are we supposed to have if you minus 44 from 90? Okay. So you can see. Just use your calculator yourself. You get the answer. Accurate. So there is nothing to, we have been doing this. All you need to know is that this is, for example, this is a GDP JPY. There's a chart to represent GDP JPY for now. So you just go and do this by yourself. Okay. Because many people find it difficult to calculate JPY and gold. So let me quickly take you to chart so that you can see all those things by yourself. Okay, this is a gold chart now. Can you see? Let me close this. Do you see? 2,281.125. So the 5-year is a pipette. Why then the 12-year is what is considered as a pip? Okay, so now 12-year is represent 10 pips. Why 5-year represents pipettes? Okay, so if you are taking a trade from here to here within this place, so if you minus this from this, you will be able to know what you have made. If your stop loss is beneath, then you have to subtract this to this so that you know how many stop loss that you are risking. So I've promised that I'll make a video in the future where it will give a equivalent value of dollar to pip. I owe you that, and I'm going to do that so that you'll be able to know every currency I'm going to show you how you will calculate your risk. Any pair you are going to trade, you will know that, okay, if it is 10 people, that this is what you are risking. Okay. So guys, I think this is where we are ending up this very video lesson for today. So thank you guys for tuning in. Please consider subscribing, turn on the notification, share and like the video so that when a new video come up, you'll be notified. All right, guys, wishing you a profitable trading week. Bye.